How much AMT credit can you actually recoup in the year that you sell your incentive stock options? Well, in this example, we have a stock that's worth $100. That's what it was sold for. Now, the exercise price was $20, and on the day of exercise, the fair market value was $30. And so the main question that we need to ask ourselves here in order to kind of drive this whole visual and our understanding of it is, what is the actual gain? And just as a refresher, in order to understand what the gain is, we need to know how much we paid for it, or in other words, the exercise price or the strike price. This is known as the basis. But the problem is that with incentive stock options, when you exercise them, you actually create a dual basis stock. And you have the regular tax basis, which I'll write RT for regular tax. And then you've got the AMT basis for alternative minimum tax basis. Now, finding the regular tax basis is pretty easy. You just look at the difference between $20 per share and the value that you sold it for. And in this case, there is an $80 spread. Now for the other basis, as always with AMT, it just seems like it's always a little more confusing. You take the regular basis, in this case $20, plus the spread between the $20 and the $30, which is 10. You add those together, which equals $30, or you could have just taken the shortcut and said, what is the exercise price, or what was the fair market value on the date of exercise, which was $30. And that is the basis for AMT. So what's the actual gain here? Coming back to that original question, which is $70 worth of gain. So now that we understand the gain of both the regular tax and the alternative minimum tax, we actually put it into this formula right here and we get a negative number. So this negative 10 number doesn't actually mean that you can get $10 worth of AMT credit back. And that's not to worry you and making you think that you can't ever get your AMT credit back, because you certainly can. But you need to understand exactly how this works. And in the year that you exercised your incentive stock options at, let's say, $30, there was that spread between the fair market value on the date of exercise and the actual exercise price. And in this case, it was a $10 spread. That $10 spread went into line 2I on part 1 in form 6251. And as you created that AMT tax liability on that form, you actually created at the same time an AMT tax credit on form 8801. Now this is where it gets a little confusing, just because we're dealing with two separate documents. And the tax credit in form 8801, that can be carried forward indefinitely. So even if you don't recoup all of it this year, no worries. You can implement strategies to hopefully recoup more in subsequent years. But this negative 10 is just going back to form 6251 and into line 2K, which is where you're going to put a negative adjustment. This is affecting your AMT for the year. And that doesn't necessarily have a direct one-to-one ratio on a direct impact on how much AMT credit that you're able to recoup. It's a little more subtle than that, and it actually does some good for your tax planning in that this is reducing your AMT for the year. So it actually creates more space for you to hopefully earn more of your AMT credit back. It's just not going to be a one-to-one ratio of $10 here, $10 worth of credit. And so if you want to learn exactly how much credit you can get back in the year that you sell, it's not fully dependent upon this. This is actually the first part of the equation. And the second part of the equation, which also shows us the tax planning opportunities and how to go about getting the credit back, and also how to get it back faster, you can watch in this video right here.